Good morning. The B day has arrived, Budget 2024. This is going to be, I think, a very interesting day for an interesting year and for an interesting 5 year term. This is Vijay here, talking you through the day, what happened yesterday, and what we can expect from today. Uh, therefore, let's begin what happened yesterday. Yesterday, there was a lot of fear, doom, and gloom across the entire Twitterati, the financial influencers, the media commentators who all predicted that yesterday the market will crash. Lo and behold, the market did exactly the opposite. We were very sanguine that the market won't crash because, apart from everything else, historically, the day before the budget, there is not too much of volatility. Market settles down in a small range of plus or minus 0.5%. So that's what happened yesterday. So while the markets opened lower, Nifty and Bank Nifty both bounced back. As I had mentioned, the Bank Nifty seems to be the more stable, and Bank Nifty did close in the green. Now, the three amigos which I talked about yesterday, Reliance, HDFC Bank, and Kotak Bank played their role. Reliance and Kotak Bank played a negative role, and HDFC Bank played a positive role. HDFC Bank controlled the Bank Nifty to make it close in positive. Now, across the board, stocks perked up in anticipation of the worst being over. I had also mentioned that 95% of the stocks had fallen last week. So one could expect this to be a relief rally easily. Now, therefore, when we looked at the end of the day, we also got the economic survey, which was tabled in the parliament. Economic survey is tabled one day before the budget day. And I'm very sorry to say it is it's a lackluster report. I think the report shifts focus from the core issues. They want to avoid the issues, and I was expecting much better kind of reporting from the chief economic advisor. It's quite a sad situation that they have tried to cover their flaws and not attack problems head on. And they are talking of trivial things like what should one do for the options and why people are speculating. After all, speculation is the blood of the capital markets, of any markets, and they're trying to compare with 2008, which is completely a different scenario. I think this reflects let's say, the paucity of thinking, which is very, very sad. So that is what is to be expected. Higher you go, the more vacuum you have in your brains. So I strongly condemn the economic survey which has been presented, which makes no sense whatsoever, doesn't attack problems, doesn't give solutions, and talks of things which are irrelevant to what an economic survey should be. We all know, being in the market for so many years, that speculation increases as the prices increases, or when prices increase, speculation increases, and either way. So this is global speculation. It's got nothing to do with only India. And if there is any cause for concern, it is in the options market. Options market, the genie is out of the bottle because of an irresponsible SEBI. I say it with all responsibility that SEBI has been sleeping on the job. In fact, they have been, siding with the fat cats in the NSE. The owners of NSE are hedge funds, large global financial powerhouses who want more revenue, therefore more profits, therefore more dividend. So when you have such large forces behind, how Indian bourses operate, and the local SEBI does not have the guts to stand up to them, then you can expect only some tinkering, and who knows, a policy error may derail a bull run which is going on in the other sectors. There are more sectors other than just the options or the futures, which are there in less than about 200 stocks. There are 5,000 stocks in the market. The capital market has to be broadened, deepened. That is what the government says. That's what the prime minister says. That's what the home minister says. And that's what the foreign minister and the finance minister say. So it's all tall talk. When it comes to doing things, they will side with the fat cats. You look at the ownership of NSE, which is available on the NSE website, and you will know 57% of the NSE is owned by the fat cats. That is they are the ruling. They rule the how the bourses should function, and therefore I don't know what the government will do, and I hope they don't do something which will derail the capital market just for trying to show that they are doing something. So now let me just quickly run through what else is important. Gold, silver, and DXY and oil were all range bound. As I said, the US markets did very well. Nasdaq went up 1.5%. The S&P went up another %. Dow Jones did not do so well. European markets did very well today. Asian markets are mixed. Nikkei is not doing so well; it is down. Hang Seng is also lackluster. Same thing with Singapore and other markets. Anyway, what is important for us today is to see how the positioning is. FIs have again bought for about 3,450 crores. DIs have sold about 1,650 crores. So another 1,700 crores have been sold by the third force. So profit booking across the board in many stocks again yesterday, though most stocks closed in the positive. That advance decline was about 1.5 to 1. So that is what it was yesterday. And we are going into the budget with a lot of people still very bearish, and even the big guys have hedged their positions. So I would say there is hardly any euphoria going into the budget, and most people are concentrated on things like securities transaction tax or the options, whereas one should look at what the government is planning to do for the next 5 years. And Prime Minister talks of a Viksit Bharat by 2047, which means us being the developed country by 2047. So what are the plans, programs, what are the incentives across the board? That should have been the point of discussion. Unfortunately, the business channels only concentrated on what is going to happen in the capital market vis-a-vis the options trading. So that is how we are. We don't have a thorough examination of the economic scenario, and we only focus on the narrow. Sometimes that becomes irrelevant. So the government goes into this budget fully, fully rich, I would say. This is the first time I'm seeing since 1947 where the government has got huge money at their disposal. So there are no excuses for saying that we don't have money. They also got a drubbing in the elections. So the elections are there 4 months down the line. If any budget can be called an election budget, this is an election year budget, because if they lose Maharashtra and Haryana, then the government may be on very shaky legs. So I think the government is savvy, the politicians are savvy, they know what to do, and I assume they will do it in the best interests of the country rather than a few people who are trading on the F&O. So today is a day when generally one should wait and watch rather than just go aggressively. I think we will know it only at the end of the day how much of problems are there in the fine print, because the budget announcements will be something, the fine print will be something else. Actually, one should not even be trading on the budget day, but then as traders we have to take positions. I'm going into the budget fully invested. We are going into the budget fully invested. We have invested in stocks with about 15% PE, 15 PE and lower. We are hoping those stocks may not get affected either way. They will go on their fundamentals. But should any proposals come positive, then we will take it with both of our hands. So whatever you do today, I hope it is successful and profitable at the end of the day. Take care. Goodbye.